Think you make too much money to contribute to a Roth IRA? Think again. There's a perfectly legal strategy that high-income earners use to keep growing their wealth 100% tax-free. It's called the Backdoor Roth IRA. And in this video, I'll show you how it works, why it's powerful, and the mistakes you must avoid. But here's the kicker. Most people don't even know this option exists. Welcome to Money Moves, where we help you learn, save, stack. If you want to take control of your money and build wealth the smart way, subscribe so you never miss a tip. Quick question. Would you rather pay taxes now or never again? Here's the problem. The IRS sets strict income limits on Roth IRAs. In 2025, if you earn more than $165,000 as a single filer or more than $246,000 as a married couple, you're blocked from contributing directly. That means high earners, the people who arguably benefit most from tax-free growth, are locked out of one of the best retirement vehicles available. So how do wealthy investors still get in? That's where the backdoor comes in. Why do people care so much about Roth IRAs? Because they're unique. You contribute after-tax dollars. The investments inside grow completely tax-free. Withdrawals in retirement are also tax-free. And unlike 401ks, Roth IRAs have no required minimum distributions. Imagine never being forced to pull money out. That's powerful flexibility. In short, Roth IRAs shield your growth from future taxes and give you freedom in retirement. So how does the backdoor Roth actually work? Step 1. Contribute to a traditional IRA. There are no income limits for making non-deductible contributions. Step 2. Leave the money in cash for now. Don't invest it yet. Simple so far, right? Now here's where the magic happens. Step 3. Convert that traditional IRA into a Roth IRA. Step 4. Once it's inside the Roth, invest however you like. From that point on, your money grows tax-free, and withdrawals in retirement are also tax-free. This process is completely legal. The IRS is aware of it, and financial planners recommend it for high-income earners every single year. The real secret isn't that it exists, it's knowing how to avoid the mistakes. Why it's powerful. So why go through the trouble instead of just using a brokerage account? First, Roth IRAs give you true tax-free growth. Every dividend, every gain, every reinvestment is shielded. Second, Roth IRAs don't have required distributions. Let your money grow as long as you want. Third, they're excellent for estate planning. Your heirs can inherit Roth assets and withdraw them tax-free under the 10-year rule. Bottom line, this isn't just about saving taxes, it's about building a legacy of tax-free wealth. But there are traps you need to avoid. Mistake number 1. The Pro-Rata rule. If you already have pre-tax money in other IRAs, the IRS treats all of them together when you convert. That can trigger a big tax bill. Mistake number 2. Timing. Don't invest the traditional IRA before converting. Even small gains are taxable. Mistake number 3. Paperwork. You must file IRS Form 8606 to report your non-deductible contribution and your conversion. Miss it, and the IRS may think you owe more taxes than you do. These 3 mistakes are what separate a smooth conversion from a costly one. So who should consider the backdoor Roth IRA? High-income earners above the Roth contribution limits. People without large pre-tax IRA balances. Anyone who wants more tax diversification in retirement. If that sounds like you, this strategy could save you tens of thousands, maybe even hundreds of thousands, over your lifetime. The earlier you start, the bigger the compounding advantage. So that's the backdoor Roth IRA explained. If you found this helpful, hit like, subscribe to Money Moves, and comment with your biggest retirement question. We might cover it in a future video.